Hello and welcome to Byju's Exam Prep IAS. Welcome to another session of Economy this week, wherein we are going to take all the important economy related articles from all the business related newspapers and analyze these articles. For this week, I'll be covering the articles which have appeared from 5th of November to 11th of November 2022. Let's begin the discussion. The first very important article is related to Government of India announcing a scheme to promote public-private partnership. PPP in short refers to public-private partnership. Now, before I start, what is given in the article? Public-private partnership is one of the models of development of infrastructure in India. A lot of infrastructure, let's say in respective sectors such as road sector, has been developed using the models of PPP, public-private partnership itself. But over a period of time, many of the issues have been faced by this model of infrastructure development, and reforms also have been implemented equally by the Government of India. The best example in recent times to promote PPP infrastructure development has been the introduction of Viability Gap Funding, VGF, Viability Gap Funding Scheme. Now, in addition to this, the most recent one or the latest one to promote PPP development is a scheme that has been launched by Government of India named India Infrastructure Project Development Fund. I'll start using the short form here. India Infrastructure Project Development Fund, IIPDF. Now, what is the importance of the scheme? Let me give a very simple example. Imagine here is a government agency. This government agency could be a public sector company, could be the central government or the ministry of the central government, etc. Now, this government agency wants to launch a PPP infrastructure project in certain sector. Let's take a simple example here. Let's say in the airport sector. Now, before calling for the PPP projects here, or before calling for the bidders to bid for this project, what they do is they develop a study or they conduct studies on the feasibility of the project. For example, imagine, right, you are the government here, you want to develop this airport. Now, you want a consultant to study whether the project should be feasible or is it feasible in this region. You will also conduct certain consultations with an expert regarding the same project. Now, once you get all the inputs, then you decide, okay, let me launch a PPP in the airport project. Then the private sector companies will start bidding for this project. This is a simple process. Now, the concern has been that over a period of time, the expenses that are paid for consultants, expenditure that is incurred for conducting all of these studies are becoming a burden for the agencies. In simple terms, if I'm a government agency, I want to launch a PPP project in the airport, just a hypothetical example here, but the expenses that I'm going to incur even before calling for the private sector companies for conducting all of these studies is becoming a problem. It is becoming a burden for me. As a result of this, the number of PPP projects which are launched where private sector participates, bids, etc. is affected. And even apart from this, one more concern is that because of this issue, we are unable to find bankable infrastructure projects. That is, those projects where certain concerns are there, but the remedial measures can be taken to address those issues and make the project workable or bankable infrastructure project. In order to address all of this, Government of India now says all those project sponsoring authorities, PSAs, right, have a look at this. All those project sponsoring authorities. What is a project sponsoring authority? I took an example, the agency of the government, that is the state government, central government. We are talking about only the government plus the entities owned by the government here, not the private sector. So the PSAs, that is the project sponsoring authorities, now whenever they conduct these kind of studies, that is, let's say use the services of a consultant, etc., for those kind of expenses, up to 5 crore rupees will be given to them under the new scheme named IIPDF. Next very important point here. This 5 crore that the amount is allocated, please remember this. This is not a grant. Remember the next point. It is not a grant. Now what do you mean by a grant? Imagine government gives a grant, means it is a one-sided transfer. Government will simply give the money, no recollection will take place. So just to reiterate, this up to 5 crore rupees, the funding that will be provided, it is not a grant. Then what is it? Is it a loan? Not specifically a loan as well. The government document says that, imagine I will give 5 crore rupees. It is in fact up to 5 crore. Let's say I will give 5 crore for the PSA here. Then the project will be launched. Private sector companies will bid for the project. Now, whichever is the company which will win the project, which will win the bid, that company will have to pay back this 5 crore rupees. I hope you understand. That company will have to pay back this amount of 5 crore rupees which was initially allocated under or from IIPDF to PSA. So it is not a grant. Next very important point, is it a new initiative? Definitely not. Earlier, the data itself is given here. In the financial year 8, that is financial year 08, 2008, then Finance Minister Mr. P. Chidambaram proposed this particular model of a fund wherein such amount would be allocated, such amount would be issued so that the development of PPP projects would be promoted. But to begin with, the allocation or the initial amount that was allocated was 100 crore rupees, not 1000, 100 crore rupees. But now government says for 22-23 to 24-25, that is for 3 financial year, we are going to implement this scheme not at 100 crore rupees, rather it will be implemented with an allocation of 150 crore rupees. So these are some of the very important points associated with the new India Infrastructure Project Development Fund that has been proposed by the Government of India. Now based on this discussion, I have given one MCQ here. Consider the following statements regarding IIPDF. It is a centrally sponsored scheme. I hope you understand the terminology here. Centrally sponsored means some of the funding will come from the center, remaining will come from the state. But until now, whatever we have discussed regarding IIPDF, I clearly told you that 100 crore rupees allocated earlier by the center. Now it is 150 again allocated by the center itself. So it is not a centrally sponsored scheme, it is a central sector scheme. Second, the funding under this is available for central, state and private sector PSAs. Private sector is not included here, only it is a central as well as the state. So second statement is correct. Right option for the question will be option B, only 2 is correct. Let's go to the next article. Railways is considering promoting solar power generation to meet zero norms. What is the argument? Now there are various articles which are discussing related to COP27, COP27, but that is more related to ecology and environment. Let me cover certain article related to economics plus the ecology and environment here. Earlier Government of India proposed a railway plan for 2030. That is for till 2030, whatever targets have been set up, it is railway plan for 2030. Under this plan, government says that by 2030, that is by the end of this decade, we want to make railways as net zero carbon emission. I'll repeat the statement. By the end of this decade, we want the railways to be net zero or carbon zero, right, emission entity, which means net emissions will be reduced to zero. Now in regards to this, article discusses one very important concern. What is the concern? If you can see the picture which is given in the slide here, you will see that there is a railway platform, and the railway platform, right, whatever aluminum hoardings are there or whatever aluminum plates are there, on these aluminum coverings, they have installed solar panels. Now the government is considering implementing on many of these railway platforms these solar panels. But one concern related to this has been raised. What is the concern? It has been found that because these are aluminum layers or aluminum plates like this, they are not strong enough to hold the weight of solar panels. I understand this. Because the solar panels have a higher weight, these are not strong enough to hold the weights of the solar panels. It is hindering the process of installing these solar panels on all these railway platforms now. Now to overcome this, to address this particular issue, Ministry of Railways is considering installing these on other buildings such as railway clubs, the other stadiums, institutions, schools, community centers, residential quarters, etc. Because the difference, there itself we can understand the difference is that in case of these buildings, we have cement walls. These are much stronger, much sturdier, and these will easily withhold the weight of the solar panels. So that is one very important point that is being discussed in the article here. Apart from this, second very important point is majority of the energy or electricity that is consumed in the railways. I repeat, majority of the railways electricity requirement comes because of the traction or comes because of running of the railways. Around 80% of the electricity that is required in the Ministry of Railways, or let's say not specifically ministry but in the railways, it is because of running of the railways itself. So the argument here is, if you want to make railways a net zero carbon emission entity, then you will have to address this issue first. You need to ensure that these traction requirements, that is for running of railways, you get the electricity from the grid, but this grid electricity which is being supplied should be the electricity which is produced through renewable energy requirements or through renewable energy sources. So this is a second very important point associated with railways pushing or railways focusing more on becoming net zero emission entity. So these are certain very important points regarding the article. The third very important article, new ATF pricing mechanism. What is this ATF? ATF first and foremost stands for aviation turbine fuel. Just like for running your car, you require petrol, diesel, etc. For flying, that is the civil aviation market, the fuel that is required is aviation turbine fuel. That's the first point. Second very important point, whenever you talk about aviation turbine fuel, most of the demand in the domestic market, it is imported. Just like petrol, diesel, aviation turbine fuel is one of the outputs or let's say the outcomes of refining of crude oil. And because the crude oil requirement in the domestic market are majorly satisfied by importing it, the same is applicable for even aviation turbine fuel. Which means whenever there is a change in the international prices, it will automatically lead to change in the prices of ATF in the domestic market. That's the second point. Third very important point, out of the ticket that you purchase, imagine you're flying from point A to point B, the ticket that you purchase, you'll have to pay a certain price to it. A large part of the ticket price is because of the ATF prices itself. That is generally around 40 to 50% of the ticket price that you pay, it is because of the aviation turbine fuel itself. Now the next very important point is Government of India on one side wants to make flying affordable. That's the reason why UDAN scheme has been launched. Second one is we are heavily dependent on the import. So any changes in the international pricing, that is the crude oil prices will change. We follow an import pricing parity. As a result of this, the prices in the domestic market will change. And in the recent times, that is in the current year itself, the ATF prices have shot by more than 50% in last 10 months. More than 50% prices have increased. So all of these together is affecting the civil aviation market. The profitability in the civil aviation industry has taken a hit. Many of these companies are incurring losses. For example, the biggest airline carrier in the domestic market is Indigo. It has kept on incurring losses or reporting losses for many quarters in the current situation. In order to address this, earlier also Government of India has taken various measures by extending certain types of loan scheme to the civil aviation market. Now the next very important reform is the pricing of the ATF. The methodology of pricing of the ATF is being changed. Like I said earlier, we used to follow a concept of import pricing parity, meaning whatever is the change in the international market, the domestic prices would be adjusted automatically. But various authorities, even the private sector experts have warned that, or have basically raised an issue saying that the prices, whenever they rise in the international market, the domestic market prices automatically rise up. But in the international market, when the prices will drop, the same reflection has not been observed in the domestic market ATF prices. So what is being done here? Government now says they are going to introduce a new system called as Mean of Platts Arab Gulf, MOPAG, Mean of Platts Arab Gulf. Now simply remember the term, don't try to enter into the technical calculations of what is Mean of Platts Arab Gulf. In simple terms, if this methodology is introduced, which is proposed by the government now, once this is introduced, it will automatically ensure that there is better transparency in the ATF pricing that is decided in the domestic market. In simple terms, government says that under this pricing, under this pricing methodology, whatever is the price that is paid for the fuels, that is ATF in Dubai, the same prices will be paid even in India for ATF, which means now there is a better system in terms of calculation of ATF pricing. Second, this will make the process much more transparent. Third, because earlier the experts were concerned that the prices, whenever they decline in the international market, same proportion or same is not reflected in the domestic market. Now it is expected that around 10 to 15% of the ATF price would be declining, or the price of ATF would be declining by around 10 to 15%. Although some of the experts don't agree with this, we are yet to see once it is implemented whether the prices will decline in this particular pattern or in this proportion or not. But apart from this, another very important point which is mentioned in the article is, earlier we used to follow a concept of administered pricing mechanism, APM, administered pricing mechanism, to decide the prices of these fuels. But post 2001, the APM has been dismantled. We have been using different methodologies for defining or for let's say deciding the prices of these fuels in the market. For example, ATF has been deregulated, petrol has been deregulated, diesel has been deregulated, which means it is the market which will decide the prices of these based on the supply and demand. In addition to this, the OMCs, oil marketing companies, are also saying that we are going to have a new methodology, that is, in addition to this, we are going to introduce a new system wherein, based on in which cities we are going to use the ATF, the prices would be different. That is, if there is a city which is very much nearer to the imported area, so obviously the price of the fuel would be much lesser. But from this city, if I am going to transport it to certain hinterland, certain inner part of India, transportation cost would get added, the prices would be higher in those airports. So these are certain very important points in the context of the new ATF pricing mechanism. The next article is again related to one more very important scheme, PM Swanidhi scheme. Now, under this particular PM Swanidhi scheme, the concept is very simple. First and foremost, many of you will simply tell me, sir, what is the long form of PM Swanidhi? PM Swanidhi stands for Pradhan Mantri Street Vendors Atmanirbhar Nidhi Scheme, PM Swanidhi. Under PM Swanidhi scheme, Government of India says those street vendors, urban part, those street vendors will be allocated or will be having an option now to borrow without providing any collateral for working capital purposes. I repeat, the street vendors now will have an option to borrow, will get an opportunity to borrow for working capital requirement. Right? Different values are there, I'll come to that. But without having to provide any collateral. It's a micro lending opportunity or micro lending facility that has been announced by the government. Under the PM Swanidhi scheme, government has introduced loan values in three different numbers. That is, three different tranches of loans have been availed. That is, one, the first tranche will be provided at 10,000 rupees. Second tranche of loan will be provided at 20,000 rupees. And third tranche of loan will be provided at 50,000 rupees value. Now, why it was introduced? Many of you would be thinking, sir, why? What was the logic of introducing such a scheme? Government of India, looking at the impact of the COVID-19 on this section of the economy, that is the unorganized section, which are very much vulnerable to the impact of the COVID-19 pandemic, announced that we will provide certain type of product to you where without having to provide any collateral, you will be availing or you can get access to working capital loans. Now, what is there in the current affairs? If you analyze the data which has been provided here, you will realize that in the first year of introduction, the first tranche loans that were issued were 20 lakh loans. That is 2 million loans of first tranche were issued, that is 10,000 rupees. Then in the next year, this fell down to 9 lakh loans, and in the current year, till September, only 2 lakh loans of first tranche have been issued or disbursed, which means gradually there is a decline which has been observed in the first tranche of loans. Now, many of you look at this statement and realize that, sir, if the number of loans which are being issued, why is the government of India planning to double the amount of the first tranche loans, which is the main point that I want to convey here. That is, the first tranche of loan is how much? 10,000 rupees. Government of India wants to increase this from 10,000 rupees to 20,000 rupees. Some of you might be thinking, sir, economically it doesn't make any sense. If the number of loans which are taken or disbursed have declined, right, from 2 million, now it is only 2 lakh. Why is the government of India planning to increase the tranche? There is a particular reason. There is a decline, no doubt. The amount of loans which have been taken have come down, no doubt. But please understand this, there is a reason for it. The reason is that the impact of the COVID pandemic was much, much higher 2 years ago. Today, the hardship that the people have faced or these vendors have faced, that hardship is not there even today. So the impact of the pandemic has come down. And because the impact of the pandemic has come down, obviously the demand for such loans, right, is lower compared to what it was earlier. But even then, why is the government of India planning to double the first tranche? The reason is very simple. The government has found that the loans have been issued and the recollection has been very, very good under the scheme. I'll repeat the statement. The loans which have been issued, the repayment of the loans has been very good. So government of India is encouraged by this fact and it is trying to double the value of the first tranche here. That is the data that is provided here. According to the statistics given by the ministry, the scheme has a NPAs of up to 14%, and in some of the states such as Telangana, the recovery rates are 98%. Buoyed by this particular fact, government of India says that I want to double the value of first tranche. So these are some of the very important points mentioned regarding the PM Swanidhi scheme here. Based on this, I have given an MCQ. Consider the following statements regarding PM Swanidhi. Loans under this scheme are provided for CAPEX, capital expenditure. No, it is for working capital. Not for capital expenditure, not to purchase an asset, but to take care of the working capital requirements. So first statement is wrong. The scheme will promote a formalization. This is one of the very important objectives. Formalization essentially means you are brought under the government regulation. The government has the data regarding your presence in the economy. That is the basic idea for formalization. So second statement is correct. Right option for the question will be option B. Only 2 is correct. Next article is Government of India, or to be very precise, Finance Ministry, finally has announced a framework to introduce or issue green bonds in India. Now, what is the basic idea of a green bond? It's very simple. If I am a corporate entity or I am a government, I will issue a bond, I will collect the money from the investors, but I can use the money for any purpose, right? I will use it for any purpose. But whenever you talk about green bonds, specifically any amount that has been collected by the issuer, either it could be a corporate entity or it could be the government, whichever has issued a green bond, they will have to earmark, reserve the amount only to be used for green projects. What do you mean by green projects? For example, Government of India has given a long list of around 9 areas where the green bonds can be utilized now. For example, renewable energy projects, clean transportation, waste water management, pollution prevention and control, green buildings, etc. So there are around 9 areas where the amount of money that is raised by the government can be utilized. That's the first point. Second point, at the same point of time, government also says, I will prohibit some of the sectors where the green bond capital or the capital raised by issuing green bonds shall not be utilized. In simple terms, the prohibited sectors are the ones related to nuclear energy generation, landfill projects, alcohol or weapons, tobacco, gaming, palm oil industries and hydropower plants which are having a production size of more than 25 megawatts. So some of the areas are considered, some of the areas are prohibited from utilizing the funds which are generated or which are raised by the government by issuing green bonds. That's the first point. Second point, how much is the amount that the Government of India wants to raise? The amount that the Government of India right now has proposed is 16,000 crore rupees. Government is planning to raise 16,000 crore rupees in the second half of the current financial year. I'll repeat. In the second half of the current financial year, Government of India aims to issue green bonds worth 16,000 crore rupees, raise so much amount of capital. That's the second point. Third very important point, this borrowing that the Government of India wants to do is part of the scheduled borrowing itself. Remember this. It is part of the scheduled borrowing. What do you mean by scheduled borrowing? It simply means government is not borrowing this amount out of emergency. No. Earlier itself there was a proposal. It is part of the calendar that has been prepared for the current financial year. So it is part of the scheduled borrowing. Fourth very important point. The Minister of Finance says that they will be setting up a Green Finance Working Committee, GFWC. Remember this. It will be setting up a Green Finance Working Committee. And this Green Finance Working Committee will have experts from all the respective or all the related departments or all the related areas as such. Now, the GFWC will be meeting at least two times in each year, and specific roles have been allocated to the GFWC, such as selection of the projects, evaluation of the projects, right, such as publishing reports on annual basis as to how much funds have been allocated, to which sector the funds have been allocated. Out of all the money that is collected, is some of the money is yet to be allocated to any of these projects, etc. And when I'm talking about allocations here, remember this. Within 24 months, remember this, within 24 months of the issuance of the bonds or the date of issuance, the funds will have to be allocated. I understand this? The proceeds, the allocation of the proceeds will have to be completed within 24 months from the date of issuance. Apart from this, I've already told you, the annual report has to be published with all the details regarding the project's allocation, unallocated amount, etc., etc., etc. So these are certain very important points regarding green bonds. So remember one more very important point here. This will be the first ever sovereign bond or sovereign green bond issued in India. I'll repeat the statement. This will be the first ever sovereign green bond issued in India? Now I've got two questions. First question is, when was the first green bond issued? I repeat, when was the first green bond issued? Second question, when was the first sovereign green bond issued? Now if you know the answer to both of these questions, please leave your answers in the comment section below. So these are the points, important points regarding green bonds. Next very important article, rupee settled trade suitable for export obligation perks. Although the headline looks very technical, but the concept is very simple. In the recent times, the government of India is trying to promote the idea of internationalization of rupee. That's the first point. I'll come to the meaning also, just give me a second. I'll repeat the statement here. In recent times, government of India is promoting the idea of internationalization of rupee. Now, whenever you talk about internationalization of rupee, it simply means rupee as a currency currently is favored in the domestic market. Now, rupee will also be used for settling trades in the international market. That is, not the Indians, not the people in India, but even the non-residents of India, those who are staying outside India, would prefer to conduct a trade, would prefer to settle trade using rupees, that is our domestic currency. Just like today we use dollars. If you understand, dollar is the best example of an international currency. Because if I import, I convert everything into dollar and pay. If I export, I am paid in terms of dollar, which means a dollar is an international currency. In fact, as per various calculations, more than 88% of the transactions in the global market, trade transactions, happen with the dollar itself. And in the context of rupee, somewhere around 1.3% to 1.4%. So the argument is, in recent times, Reserve Bank of India, Government of India have been promoting the usage of rupee not only in the domestic market, even in the international market. For example, last week itself, I discussed one of the very important articles where I told you that India is negotiating or is having negotiations with various African countries to conduct trade with them in terms of rupee. Earlier, we have discussed the concept of masala bonds also. All of these basically means rupee is not being utilized only in India, but outside India as well. And if that increases, we'll simply call rupee as an international currency, and there it is nothing but internationalization of rupee. Now moving a step ahead in the same direction, now Government of India says, even under many of the schemes of government, if you are supposed to settle the trade, that is, let's say you are supposed to conduct trade, until now, only when the trade is settled in dollars, you are eligible for the incentives. I hope you understand this. Until now, under various types of schemes such as export obligation scheme, whenever the settlement of the trade took place in dollars, right, the person who was involved in the trade from India was eligible for incentives. Now government says no issues. We are going to amend. We are going to amend all these regulations. Even if you settle the trade in terms of rupee, even if you conduct the trade in terms of rupee, invoicing is done in terms of rupee, I will, I will be obliged to pay you the incentives now. That will help in promotion of, again, conducting or settling the trade in rupee terms. And if settling of the trade happens in rupee terms, are we not promoting internationalization of rupee? That is the objective in promotion of rupee trade settlement, which is being discussed in the article here. Apart from that, nothing else is important. Please don't worry about the article. Let me go to the next article related to tax rates. Mr. Bibek Debroy, a member of Prime Minister's Economic Advisory Council, in a very recent speech, pitched the idea of a single GST rate. Having said so, I will also be very clear upfront here. While discussing this concept, he clearly stated he is not speaking as a member of PMESC, rather he is talking as an individual citizen. Means the viewpoints are his personal, not that of Prime Minister's Economic Advisory Council. But nevertheless, whether he is giving the views as an individual citizen or let's say, right, as a member of PMAC, the views are important, relevant for UPSC examination. That is, in the context of India, when we introduced GST, Goods and Services Tax, 1st July 2017, we introduced a model of GST where there are multiple tiers, multiple slabs or multiple rates of GST. 5, 12, 18 and 28%, these are the 4 very important slabs within GST. Are these the only slabs? Of course no, right? These are non-zero slabs. There is 0%. There is composition scheme slabs 1% and 5%. There is 3% on some of the precious, let's say metals, etc. So argument is, we have multiple slabs, multiple rates of GST. But again and again, one criticism or let's say one concern which is raised regarding the GST structure is, it looks like an old wine in a new bottle. That is, earlier we had different types of taxes, different rates, different names. Today what we have is a single name, GST, but within that we have multiple rates of GST, which looks like old wine in a new bottle. So the argument which has been put forward by this expert is that we should not have multiple rates, rather we should have a single rate of GST. But some of you might be thinking, sir, in that context, why do we have multiple rates? Why not having only single rate? Many countries have it. The standard rate is the one most of the goods and services are taxed on rate. Only couple outliers are there. Some of you might be thinking, sir, why not? Why not adopt that model? The answer is given by the same person. The argument which was put forward by the government was that we cannot have a single rate of GST in a country where there is so much of variation. For example, how can we have a single rate of GST on a good which is consumed by a poor person, on a good which is consumed by a rich person? For example, a Hawaii chappal, majorly consumed by the middle class and the lower middle class or the poor households, whereas an Audi car or a Benz car, it is consumed by the rich households. How can we have the same rate of GST? That is not acceptable, citing that multiple rates of GSTs were actually implemented, multiple slabs were introduced. But this kind of a multiple slab structure, as per the expert, has led to lot of litigation because subjective interpretation is applicable. This has led to litigation. So the argument that has been put forward by Mr. Bibek Debroy is that rather than having multiple rates, which is very difficult to administer, which leads to various issues such as inverted duty structure, which is not the model that is generally used by other countries when they implement GST, we should move towards a single rate of GST. Right, so these are some of the very important points given in the article regarding GST. Next article, International Solar Alliance, just a single point here, has released a plan to raise $1 trillion by 2030. What is the single point agenda that I want to discuss here? Simple. International Solar Alliance, it was proposed and set up during the Paris Climate Agreement. And very recently during the COP27, again there was a discussion regarding International Solar Alliance. And this ISA has proposed a roadmap. Title of the roadmap is, that is document, Our Solar Future, Roadmap to Mobilize 1 trillion by 2030 during the COP27. And as per this, they have put forward a plan to raise $1 trillion by 2030 to promote solar energy production. Again, what are the important points? Not at all required. These are very technical in nature. But this document title is relevant. Remember this, who has proposed it is relevant. Right, so these are 2 or 3 points associated with ISA plan. And final article for the day, millet exports would be promoted by the government now. The United Nations has announced that the year 2023, remember this, the year 2023 will be International Year of Millets. IYM, International Year of Millets, by United Nations General Assembly. And in the context of India, we produce a lot of these millets, we consume and we also export. Now Government of India says that I will promote the exports of these millets to the international market. In this regard, the data that is provided is the amount of millet exports accounted or went up to $64 million in the financial year 2022, and for the next financial year 23-24, they have kept a target of, or they want to promote and take it up to $100 million. In this regard, APEDA, remember the name, very very important, Agriculture and Processed Food Products Development Authority, right? Remember the name of this authority. So APEDA now says that we will organize a series of events in the international market, in the abroad, in order to promote, right, the sales of the millet products, or the millet products will be marketed in the international market, so that the sales automatically will pick up. Through this, we want to increase the exports of these millets to countries such as UK, Belgium, Japan, United Arab Emirates, Saudi Arabia, etc. So these are certain very very important points regarding the millet exports that the government wants to promote from the domestic market to the international market. Now many of you might be thinking, sir, what is the importance of all of this? Agriculture exports are very important. One, they provide an alternative sources for the farmers or the cultivators to sell in the market. Apart from the domestic market, now you are also getting access to international market. That is relevant. Don't you want to promote more and more exports from the domestic market to the international market? Government of India set up targets to promote service exports, to promote goods exports, etc. And so these are very very important points related to promotion of exports from the domestic market to international market. So these are the various articles as well as the questions related to articles which have appeared from 5th of November to 11th of November 2022. If you like the initiative, hit the like button, provide your valuable comments in the section below, and if you are yet to subscribe to Byju's Exam Prep, kindly do it now. Thank you. Have a great day.